All right, it is time. It is time to talk about inflation. Let me make sure. Got the mic struggling a little bit. Yeah, it's not good. That's an understatement. Oh boy, oh boy, oh boy, oh boy, oh boy. Let's make sure the audio is good. Let's change the audio here. There we go. Audio should be a lot better now. Audio should be good. Let me just get my phone real quick, guys. This is insane. I did not wake up and expect it was going to be this bad. I thought it was going to be bad. I didn't know it was going to be this bad. Samuel, morning, Ahad, Big Apples, Aaron Lindman, thank you guys all for being here. I get picked away. Good morning. Harminder, good morning. Yeah, I looked at my portfolio this morning as soon as I saw the release, and it was down another 3%. Palantir is actually holding up really well at 916, but it's bad. Golfing this morning. My mom got me this shirt. She said you should wear this shirt. I was like, all right, I'll try wearing this shirt. Look, it's rough. It's bad. It's not good. I know you guys have seen it. It's not good. We're gonna pull up Webull right now and show what the market's looking like. It's bad. And it's definitely not 9.1%. That's ridiculous. It's probably way more than that. I have not been alive enough to ever see inflation like this. The last time we got to this level was like the 70s, right? So quite literally in the past 40 years, we've never had a type of inflationary environment other than what we are seeing right now, which is just, to me, it's pretty insane. I've never seen this before. Glitch Life, good morning. Let me share my screen real quick. Let's look at this. We have 5 minutes until the U.S. stock market opens. There we go. Share later. Okay, do you guys see it? No, you don't see it yet. Okay, let me share this. The other thing that was interesting in the morning when I saw it was, I thought it would be like 8.8, 8.9, and they were like, nope, it's gonna be straight up 9.1%. Bitcoin, as you can see, has totally collapsed. Deservedly so. If inflation is this bad, Bitcoin cannot stand up to 20,000. It is not the inverse hedge we thought it was against inflation. So Bitcoin very close to 18,000. We'll see. Now, the market was even worse than this probably like an hour ago when it first came out. A little bit of the dips have been bought in the pre-market, but it's rough. Roku down to $84. Snapchat down to $13. S&P 500 $375. It ended yesterday $380, so it went down a full 5 points, which is a lot to move the S&P that much down, almost 2%. Palantir, look, it's holding up well, 919. I didn't expect it to even stay at the nines. When we had inflation data this bad a couple months ago, we went straight down to like the sevens. So the fact that it's holding 9 is pretty impressive to me, but we're going to see if that is able to stay. ARK down to 42. Coinbase down to 51, DNA down to 2.9, nothing too crazy from there. Google down 2.13%. There's some interesting news on Google that I want to talk about. The former senior vice president, well, two things. Well, the senior vice president of Google is saying two things. Number one, that they were slowing hiring. Well, the CEO, Sundar Pichai, has said they're slowing hiring into 2022 and 2023. Second, the senior vice president of Google has noticed that 40% of search results or search activity for food and travel is happening on Instagram and TikTok. This is the former the senior vice president of Google has said this, which is pretty insane because if you're thinking of buying Google stock because you're like search not's going away, right? Search is, they can't lose on search. The internal team at the company saying we're losing on search in two major categories to Instagram and TikTok. So TikTok's not only hurting them when it comes to YouTube, they're really hurting them as well when it comes to search results. I don't use TikTok as a search engine per se, but I could see how, Gen Z does. And well, I am Gen Z, but the point is that's still bad. Facebook down 160. Now, I think, to be honest, in some contrarian world, when the market opens at 9:30, and for those who are here, we have this bell ready for when it opens. We open the market with the bell. The dip might get bought up. We might see a sharp way down, or we might see the dip get bought up. Apple, I haven't checked Apple in like a couple of days. I didn't even know it got back to the 140. So Apple's at 142. Apple going from 145 to 142, given how many shares outstanding they have, that's also a very difficult thing to do. So Apple has fallen pretty significantly as well. How bad do you think it will be? Bloodbath round two? I don't know. I have no idea what's going to happen. I'm very curious to see the market open. Because in the market open, either it's going to be like a bloodbath or it's legitimately going to be, we're factoring it in because the market's so quick, bro. They're like, okay, we got the news. And by the way, they got the news before the news even came out. So they got the news. They're like, yeah, we're going to sell. Okay, it's time to buy. They're probably going to factor in 100 basis points, right? 100 basis points is most likely going to be on the table. I think there's no way the Fed is like, yeah, 75. It's like, no, my guy, we got to do 100. We got to do 100. We got to get this back to normal. And the Fed has committed that they will do anything to get inflation down to 2%. Like the idea that inflation, we have what, 6 months left of the year? 7 months? No, we have 5 months. This is a 7 month. We have 5 months left in 2022. So the idea that it's going to go down to 2% or even below 5%, I mean, it's going to be hard. It's going to be hard. Just wait for the earnings compression. This is a really good point, Samarth. By the way, we have a minute till the stock market opens, but earnings compression is also very important. I'm really looking forward to some of the bigger earnings that we are going to see. And, we're going to be able to figure out if the market also feels like it's time to sell off everything else. Hold on. Let me pull up Webull. And then let's share the screen as the market begins to open. It's 9:29. Market's likely opening in a couple seconds. And we're going to see where it goes. All right, 9:30. The market is open. If you're not up, wake your ass up. It's time to see how much money we can lose. All right. Step up. Bitcoin, you're up first. How much money do we lose? That's the wrong Bitcoin. Amazon, you're up first. Down 3%, 106. Phenomenal, Amazon. S&P 500, how are you? 300. I should definitely have been on The Price is Right. I know you guys are older. Like, remember that show. I definitely should have been on that show. Tesla up to the plate, $681. You were just at $750 and now you're back down. By the way, Elon Musk, it looks like your ass is getting sued. Let's look at Twitter. Wow, Twitter green is interesting. So Twitter's green because the company has officially decided to sue the crap out of Elon. And they're just like, no way are you getting away with this. So that's pretty bad. But also, you wouldn't imagine it stays green for that long, given what's going on with the fact that the macro sucks. Time to wake your cousin up. My cousin actually went back to Massachusetts, so she's here getting her master's at a school in Massachusetts. So she's gone. So she doesn't have to deal with me anymore. Amit, you see Sean's video last night about Palantir? Yes, and I will be talking about it as well. There's a very interesting development in Palantir. I will be doing a later video about that today, talking about it. Bitcoin below 19. What? Here we go. BTC, you're up to the plate. Can you stand the heat? Bitcoin. 18. There we go. Bitcoin's below 19. Bitcoin is below 19. $18,000 on Bitcoin. Wow. Okay, so Palantir is staying strong at 916, still down 3.5%. Nothing crazy. QQQ 280. It was touching 290 this week, right? Yeah, I mean, it was up there. Okay, so QQQ 280. Zoom 101. Zoom is $1.55 away from being a under $99 stock, or under $100 stock, which is pretty wild. Upstart down another 3%. Shopify somehow managed to keep in the 30s. Okay, let me post this thing real quick. Okay, so that's that. Google down another little bit of percentage points. Coinbase, I would assume Coinbase goes down even more, but it's down 6% right now, very close to being under 50. Roku at 84. What are some of the other big names? Let's look at Nvidia, or let's look at Nvidia. 145 down 4. Oh, let's go to Enphase. Enphase has to be below 200, right? 180. Wow. Enphase was 211. This one is such a fast mover. I'm like salvaging to get Enphase at 150. I want to see if that happens again. I actually will pull the trigger because I'm very convinced on Enphase, but I don't think 180 is enough. Amit, when will you do the podcast with Kelly? Well, July 27th. For those of you who know my kind of relationship with Kelly, or Twitter relationship, whatever. July 27th, you guys will find out. July 27th is going to be a fun day. Definitely do not miss the live stream that day. Tell your cousin to bring some earplugs and be quiet next time. Oh boy. All right. So I was waiting for Google under 2K and IDK if it'll reach that point now. Well, it might. I mean, like, look, earnings are so important. I cannot wait for earnings. I want to see what's going on under the hood. If all these companies are slowing hiring, they're doing layoffs, they're having higher performance reviews, they're saying, hey, they're lowering their guidance. I mean, it's because they see internally that their financials suck. Like Google, it's not that advertising is going away or that Google's not going to do billions of dollars. It's that they're not going to do as many billions of dollars as they did 60 billion last quarter, something like that, 45 billion, some ridiculous number. Maybe they do let's say they did 60, maybe they do 53 or 54. I mean, that's $6 billion less that they're making. That's a lot of money, right? So it's not like their business is dying. It's just the growth that you would assume is not there right now, which is a massive opportunity for people who wanted to get these stocks at lower prices. The craziest thing, let me look at Google, is that it just collapsed. Like the pandemic was so fake for the stock price. I mean, look at this. It got to 3,042 in December 2021. And all of this was pandemic. All of this was Fed liquidity. So if it were to collapse at its real, like, artificial level from excluding liquidity, we're looking at 1,300. Now, is that going to happen? Probably not, because they've grown a substantial amount to justify a lot of this delta, but maybe not enough to justify above 2,000 yet. I mean, we're going to really have to see. We're going to have to see. Amazon just had its Prime Day, so it'll be interesting to see how much the results came from that and how much things have changed, all that stuff, but we'll go from there. Let me go to YouTube. Let's look up what now Jim Cramer is saying some interesting stuff about inflation. He also said July 13th will be the market bottom. He's very head first on that. Let's hear his take on the CPI report. Let me share that with you guys right now, and let's go from there. Stop sharing. Okay, share screen. Here we go. Okay, here we go.
You're looking at this Fed. I was just looking at a tweet by Brian Chung. Fed funds futures now flashing a 30% chance of a 100 bips move in the FOMC meeting at the end of the month. What do you think?
No. When I look at the numbers and I think about what's going to happen in July from the PPI that we're going to get, I like everything. I mean, food's down pretty. We know that all the commodities in the foodstuff segment are down. We know that energy's come down. We know that used cars have come down. We know that new vehicles are actually not going up, which is surprising. Shelter's still bad. We've got rentals that are still up big, but I think that you'll find from the applications numbers that housing's going to come down. There isn't anything in these numbers that doesn't indicate peak. And I'm listening to the people who were on before, and I think that they.
So just to give so Cramer says it's a peak, right? The reason we're analyzing this is because he has a pretty big voice in the financial sector. Like, it's important to analyze some of the stuff that he's. So his argument is that if you look at all the other external factors with what's going on with commodities, housing, oil, energy prices, that this is peaking. And the PPI, the producer price index, what producers are paying for their goods, he's also saying is peaking. Now, I remember in April when they said 8.1% was peaking because the PPI was slightly lower than the CPI. So it indicated there was a delta of like change, that if producers aren't paying that much for their goods, then eventually consumers will not be paying that much, right? Because if it costs $1,000 to make a TV and right now it's costing, I don't know, $1,100 to buy it, that $1,100 will eventually go down if producers are still paying less to make the TV in the first place. But that didn't happen over the past couple months, right? So it's interesting to see him take this perspective right now.
Are dreaming. I mean, do they not look at the actual commodities? Are they just looking at some stupid thing that came out of the Labor Department? I mean, go look at the actual markets. Everything's come down. Used cars have come down. I mean, you can't look at these numbers in a vacuum. I mean, there's been a tremendous decline since the Fed started tightening. So if you want to go Volcker, I mean, I lived through the Paul Volcker era. This is nothing like that. I mean, we're going to have that bad wage inflation.
You really don't think the Fed's going to? I think,
look, I want the Fed to do 100. I've been saying that.
Right.
I've been saying that endlessly. But I do think that when we actually look at the input commodities, this report was taken at the absolute height. And I think that we have to think about what's happened since then. But I'm in the actual markets, and all the companies that I'm dealing with are saying that they're getting real relief. And it doesn't matter whether it's plastic.
Now, one thing that's interesting here is that Bacon Bombs has an interesting comment in the chat that says, I hate agreeing with Cramer, but gas prices certainly did peak end of June around me. That's the same thing that happened to me as well. Gas prices did peak for me. So, I mean, it's hard to say just because gas prices peaked, that means this is why inflation is peaking, but you can kind of see his point. I think we're going to have to see in August what CPI data looks like, because if he's saying that it peaked, then that means August it should be bad. or August, it should be a lot better. By the way, guys, we will be talking about inflation, me and Tom Nesh, on our podcast. Some of you may know of it. Some of you may not. It's called Can You Learn to Speak, My Guy? Yes, it's the stupidest podcast name in the world, but it's actually developing a pretty good audience. Here's the channel right here, 4:15 Eastern Standard Time. We'll be talking all about inflation and a bunch of other stuff that doesn't have to do with stocks. So if you just want to relax and get your mind off some of the stuff, you can check it out. Can You Learn to Speak, My Guy? That is the name of the podcast. We will be talking on inflation and a lot of other things. Okay, so this is really, really interesting to me, primarily because I've been saying for the past couple of days now, earnings is going to be incredibly interesting to analyze. Why is that the case? If Facebook comes out with really crappy earnings, a lot of hedge fund managers and portfolio managers, they can justify selling the stock to their clients. Why? Because the macro sucks, inflation sucks, CPI sucks, all of this stuff sucks. So they can tell their clients and their portfolio managers, hey, we need to sell off Facebook because Facebook's earnings are bad and we can justify selling it or shorting it or whatever they're going to do. But if Facebook earnings are good, or not even good, but like mediocre, meaning let's say they're expecting 27 billion and they bring in 26.9 billion or 26.83 billion. If that's the case, portfolio managers are going to be in a really tricky position, and so are institutions. And the reason for that is because you can't justify selling something that is decent earnings when the macro sucks. So what they're looking for is how much can earnings like crap the bed along with the macro crapping the bed, so they can actively say, hey, we're going to sell the stock and we're not going to think twice about it. Because there is no reason to worry about thinking twice, worry that we shouldn't be DCAing, et cetera, because again, they have to manage sort of like the day-to-day risk. If the earnings suck, and the macro sucks, then boom, it's a sell. If the earnings are kind of good and the macro sucks, you're like, well, what do I do? How do I justify selling it or not selling it right now? Like imagine, so this is what happened with Open Door. Open Door in their Q1 earnings, they can barely touch $6 right now. They're like a market maker for houses. They kind of like they're the better version of Zillow's iBuying program, and they reported 500% year-over-year revenue growth in Q1. 500. These are startup numbers growing 500%, and their stock tanked because the macro is just not good for it right now, right? So when you have bigger companies that like tech companies that are reporting decent earnings, I think the market's really going to struggle with what to do with these companies. However, if inflation hasn't peaked, or if it has peaked and we're getting 100 basis points, then I think the markets might say, okay, it's factored in, and these are good prices for Google, even if their earnings aren't great, because we know that the Fed's going to raise 100 basis points. We are going to see. Look at CPI Breakdown. Energy was key at 41.6% and is dropping. Yeah, that's an interesting point. And I think that also feeds into Kramer's argument about how this might be the peak. Market at a pretty big bounce. Let's look at Bitcoin. It's a little bit of a bounce. Yes, Bitcoin. I hate when it brings that one up. Bitcoin. Here we go. Oh, yeah. Well, Bitcoin definitely bounced. So it went up from 18 down, or 18.9 back to 19.2. That's the other thing. That's kind of what I was like. As soon as I saw this in the morning, I was like, it's going to be bad, but I don't know if it's like bloodbath bad. Because the one thing to remember is we are all Twitter's up 35. Wow. Twitter's up 5%. That's amazing. We are so oversold. And like, I know that term is kind of weird because like theoretically we should be more sold if like the economy gets worse, but like it's pretty bad. The S&P's down 18% year to date. Like, it's pretty bad. Like, I mean, yeah, we could go lower, but at some level, you look at the economics of these companies and you're like, hey, these are good companies. Let's look at Spotify. By the way, Spotify just acquired a company yesterday called Hurdle. You guys know Wordle, that game that the New York Times acquired? There's a music trivia game called Hurdle that Spotify acquired. So that's that. Unity stock is down 19%. Yes, it is. And I have a little bit of analysis for why it's down 14%, not 19%. So first of all, Unity is a big Kathy stock. Let me pull up Twitter real quick. Unity is also a stock that is rather interesting in the gaming space. I've seen a lot of people actually, believe it or not, I've seen a lot of TikTok research of engineers building games on top of Unity. So it's an interesting like platform in and of itself. Here's a tweet I want to show you guys around Unity. It's by my guy, Sam. I don't know if Sam is watching this, but he put some analysis out here. Let's share it. I would also definitely give a follow to him if you guys are on Twitter. He does awesome analysis. Shout out to 284 people being here. I really, really appreciate you. It means the world to me. If you're new to the channel, feel free to check out some of the content. Here we go. Okay. A flood of news from Unity. Unity and IS to merge in an all-stock deal. So that's one reason when companies go down the day they announce mergers. Unity announced they've announced a 2.5 billion share repurchase program, and then they've also announced a acquisition. So when you're the acquiring company, I mean, you're losing money, right? You're literally paying out money to acquire the company. So that's like that means your stock price is not, shareholders are not necessarily going to like it. 2.5 billion share repurchase program. This is not necessarily the best for high growth tech companies, because if you're buying back your, like, the reason we don't want Palantir buying shares is because they have 2.3 billion in cash. Imagine if they invested, I don't know, like 800 million in a big sales force, right? They just hire like 2,000 salespeople, and that 800 million turned into a couple billion of revenue in the next couple of years. Like, that's way better than buying back your shares at a theoretically underpriced value of $7 to $8. So when you're a high growth tech company, you don't, like, Apple buys back their shares, right? Like that, like they worry about that. Facebook buys back. But when you're high growth tech, when you have a under 50 billion market cap, you're going for it, right? You're taking that money and grow at all costs. Unity cuts full guidance or full year 2022 revenue to 1.3 billion from 1.35. So it's a little bit lower. And then their software sees Q2 results slightly higher than top of end of guidance range. So that's why they are down 14%. I don't think shareholders love that 2.5 billion share repurchase program. And obviously, if it's an acquisition, hopefully the acquisition works out, but shareholders are not necessarily happy for that. What's ARK's retention rate this year? Must have lost some impatient clients. The interesting thing is ARK has had a lot of inflows of capital, actually. So as much as we say like people are like mad at ARK, I forgot this stat, but they've actually been one of the funds that has the most inflow of capital, because I think the thesis they're selling, which at the end of the day, if you're investing in ARK, you're like, let's say you manage $15 billion, you're investing like, I don't know, $1 billion, which is 1 out of 15, to ARK as like a exposure to high tech growth. So you're not putting all 15 billion in ARK. So if you're a hedge fund and you have 1/15 of your portfolio in high tech growth, that might truly be some of the most deep value stuff in the world. When we're talking about Roku and Zoom and Teladoc, if Roku is going to go to a 1200 base case, you know, Roku is going to go to 605. These are like 6 to 12 X's in the next 4 years, which would be a 40% CAGR, compounded annual growth rate, which means Kathy would be right on this. You want that in part of your portfolio. So I think a lot of managers, even though they don't like the performance of ARK, I don't think they're blaming Kathy. I think they're definitely blaming the macro. Now, they're definitely blaming the fact that she hasn't hedged a lot of her picks and stuff, but that's not what she's supposed to do. She's an ETF that's supposed to like just keep buying high growth tech, even when it's bad. And unfortunately, it just ended up being bad for longer than she expected, and probably will be. So that's why she actually has had a lot of inflows, and people are still trusting her with their money. Now, the question is if some of these companies go bankrupt, like if Robinhood goes bankrupt, right, which I don't think will happen, or Shopify, which I don't think would happen either, or Coinbase, which that might actually happen. I don't think it will happen, but it could happen given crypto. Probably won't happen though. Like if these companies go bankrupt or out of business, like imagine she had BlockFi as a public company if they were public instead of Coinbase or something, right? Like that would show horrible due diligence. That would show that it's really bad, et cetera, et cetera. So yeah, I mean, that's why I think Kathy's still getting money. Palantir's still back up to, where's Palantir? 935. So Glitch Life was right. There has been a little bit of bounce in the market. It's not as dire. The market has ate up a little bit of this dip. And it kind of seems like they're like, okay, let's see what's going on. I'm at Palantir HQ today in London. That's awesome, Simon. Thank you for telling us. That's great. Arwen just got caught up reading CPI data. Yeah, it's a little rough today. Let's go to YouTube as well, see what else CMB is talking about. Then we'll see where that's going from there. So Jim Cramer did say July 13th will be the market bottom, which is very interesting. So we're going to see that. Let's look at this one. This is how we're going to end our live stream today. Twitter has no reason to settle. I am curious to see how this Twitter deal is going to end. And then we'll end it there. So let's open that up. Twitter has no reason to settle. The Twitter Musk saga is just getting more interesting.
Law professor Ann Lipton. Professor, buyer's remorse just never works, does it? Is this a simple case of that? I mean, even I looked over a list of things that have happened in the past, and companies that really didn't want to go through with mergers usually are they're on the losing end of things like this. It's Elon Musk, not a company, but how do you expect it to play out?
Well, I mean, it's a little bit hard to be sure what Musk might have up his sleeve, but based on what we've seen so far, and I'm including that letter he filed that said he was terminating the deal because he claimed that Twitter was in breach, it does not look like his claims are very strong. I mean, this has, as you say, this has happened before. Buyers have agreed to buy companies, things change, the markets change, and they want to back out. And when those cases have actually been litigated, very often those buyers have been forced to close, even over their own objections.
Is there any material cause that could be proven and how would that happen with the whole bots, fake account issue? What would have to happen for that to factor in a big enough way for Elon Musk to prevail?
Well, he's got two arguments on that score. One of the arguments that he was sort of making publicly before the lawyers started filing formal documents about it, was essentially that Twitter's information was false, that the merger agreement said that the SEC filings were true, and the SEC filings, where they talk about their spam, misrepresented the number of spam, the amount of spam on the platform. That was what he claimed. Now, under Delaware law, and the words of the contract, the only way that he could escape the merger on that grounds was first he'd have to show that the representation was false, and that would be difficult because the representation was actually, we think it's 5%, but we might be wrong, and that might be the wrong number. So we'd have to show that that was false. And then he'd have to further show that it was so false that it was actually going to have a very long-term, significant impact on Twitter's earnings going forward. And he hasn't shown what his evidence is for thinking it's false, and he certainly hasn't shown any evidence that that's so false that it would have that kind of financial impact. But that would be one path. And now he's got an alternative path, which came in more later once his lawyers started sending formal letters, which is not so much that it's about whether the numbers are true or false. It's about the fact that Twitter promised, as part of the process for closing the deal, that it would supply him with sufficient information to be able to actually close. And that Twitter is stonewalling his request for information about the bots. And therefore, it's violating its promise that it would give him sufficient information, and then so therefore he can walk away. Now, I mean,
not a compelling argument, Ann?
It's not a particularly compelling argument because.
All right, we'll end that there. So, I mean, yeah, I think the core thesis that she's making is like, look, Twitter said they would respond with him, they would help him the most they wanted to do, but apparently he wanted excess amount of information, and now the ironic thing about Elon is like, all right, we're gonna go to court anyway, and so all this information is gonna be leaked. So whatever stuff you were allegedly hiding, that's gonna be exposed. I think Twitter's like, we don't care, we'll show it in court. You still have to buy the company, because I think they thought even if they show that data, he's not going to buy the company, and that's why they wanted to do this in a way that was more official with a judge versus just like showing him and then him rejecting. So it's gonna be very interesting to see what happens. Amit, did you see the video of the skateboarders and the Google Waymo beta card in SF? I saw the Google Waymo beta in SF. I didn't see the skateboarders though. So that's interesting. I got to look that up. Twitter not only lied to Elon, but were spoofing numbers and lying to their own shareholders. Well, if that's the case, then Elon doesn't have to buy this. I think Twitter thinks they weren't, and I think that's what we're going to see. Twitter is necessary for some businesses, I guess, but at its heart, it's a problem is in the name. A bunch of twits with an opinion and too many bots. Yeah, I mean, I use Twitter every day. I have about 6,500 followers. It's a pretty phenomenal product to just get quick news up there, updates, all that stuff out there. I just don't know the average person who doesn't have a lot of things to say. Why would they use it, right? The average person would use Instagram because everyone posts photos, and Facebook because you connect with family. But if you're not a chatty person, you don't post things on Twitter. Like what's your thing to post anymore? I don't listen to Money Talks anymore, guys. I cannot, because you guys are on my channel right now, and I know the 269 people, 69 are like OGs of the channel. First of all, July 27th, make sure you guys are there. Write it on your freaking calendar. Do not schedule anything at 10 a.m. July 27th. Even if you're at work, make sure you got your AirPods. I'm introducing my startup to the world. It's going to be the beginning of a new journey. It's going to be fun for those of you who have followed me from, I don't know, from so long ago. Thank you guys for being here so much. I know you guys support, and I appreciate it deeply. So July 27th, first of all. Second of all, the reason I'm saying that is because the Money Talks comments, I get these every single day. It's actually getting ridiculous at this point of, hey, where are you on Money Talks? Why aren't you on Money Talks? Admit, we need you back on Money Talks. The new host is boring. I stopped listening. Look, man, I don't know. Sometimes you got a good thing going, and then for some reason, people just end it. People just completely end it. Admit, you're handling Money Talks with grace. Keep your head up. No need to look back. Well, here's the thing real quick, and this is the last 5 minutes of the stream, and then we'll end it. So for the people that are here that want to hear this, thank you for being here. In terms of the conclusion for the market open today, CPI sucks, but the market is ripping. We're having a little bit of a bounce, so I think it's immediately being factored in. 100 basis points are being factored in, which means should you buy or sell? That's ultimately your decision. I think obviously DCing is probably the best strategy, but if Kramer's right, then maybe this is a little bit of the peak and we're going to see what happens. I think we have to see a lot more data to see if that actually happens. So we're going to know in the next couple of days, or probably the next couple of weeks. In terms of Funny Talks is so bad. You better wear a suit on July 27th. I am thinking of wearing a suit. I think it would just be fun. We also have a green screen in my new apartment. I might play with that. The reason I'm handling this with grace is because, well, to be honest, a lot of opportunities have happened as a result of not being on Money Talks. That has freed up my time, which is awesome. And you don't want to be in an environment where someone doesn't want to be with you. Like you don't want to go to work if like, you don't want to be married to someone if they hate you, right? Even if the marriage is like really financially successful or something like that. So yeah, it is what it is. And you got to move on. But goodness, I don't know if you guys saw the latest comments on their newest episode, because they were talking about the host and just the amount of comments. And I don't comment on the episodes anymore because I don't want to be like a dick or anything, but the amount of comments that are like, hey, bring a mitt back. It's cool to know that. I think, one of the things about me, for those who don't know, is I did debate in high school, right? So I was the 7th best debater in the United States of America. That trophy is right there. Here we go. I suck at this. Okay, whatever. Whatever. So I was the 3rd best public speaker in Europe. I did a lot of international speaking and debate competitions. So when it comes to communication skills and being able to control an audience and being able to transition from cue to, like, I did this shit for 4 years. I literally debated over thousands of rounds, and I sucked at it in 2012, and I got really good at it by the end of 2016. So good that I was on the national USA debate team, right? I was 1 of 9 people. So when they asked me to host, I was like, yeah. And it was very natural because I just know how to do that shit. Like and they had the infrastructure and the production team and all that stuff. So it all kind of fit. And then you get, human emotions getting in the way that stop a product from being really successful. I mean, I thought that product, quite frankly, could have been like a very big media company. Like there was never, I've seen a stocks debate show like that, like what they were creating. So I thought it could have been really good, but nonetheless, it is what it is. And, that's realize Mitt was replaced by a girl named Grace trolling her. Nah, that's funny. Yes. Some of you have some comments. Look, and it's no shade to Grace, man. She's an awesome person. I don't know if in that show her talent as a moderator or host can shine necessarily. And other things, sure. And that's a little bit of a different dynamic. But things come and go, and you got to move forward. So it would have been a really good show, though. It would have been really cool. Anyway, Can You Learn to Speak My Guy podcast, 4:15. Me and Tom will be there. You guys can check it out. So definitely check that out. Can You Learn to Speak My Guy? That's what it is on YouTube. Give it a chance today. It's a really funny podcast. We try to make you laugh a lot, to be honest, and not talk too much about stocks in the market. So check that out. And 4:15, we will be talking about inflation today, though. So you'll get Tom's take on inflation and what's going on. And Mick got a new fan group. I appreciate you. The 270 people that are here listening to me talk about stuff that's not the market. I appreciate you. It means the world to me. In November, I had 0 people in the world care about me. I worked my ass off building out content. And by February, I had 10,000 people who cared about me. And now it's just a question of continuing to grow and grow and grow. Big changes are coming in my life. I know it's sometimes weird to know as like a stranger on the internet and be like, oh, like this stranger's launching something new, or they're doing something kind of crazy with their life, or they quit their job. And like, why should I care about it? And it's like, the funny thing is, the reason we care about it is because of the beauty of creativity of these platforms, which is that we get to care about regular people that you could see yourself as. It's harder to relate to an Elon Musk who's like, doing all these crazy things. It's a little bit easier to relate to a guy who no one knew about a couple months ago and just worked hard and got people to care about him and is now doing some things with his life. So I appreciate everyone who is here. I appreciate everyone who's potentially even curious about the things that I'm doing in my life. And I appreciate everyone who comes back and continues to watch me. Someone started a Mitt fan group GoFundMe. Honestly, guys, I'm just so happy you guys come back to watch the videos. That just means the world to me. It seems like yesterday I found your channel. Yeah, it's a crazy part about YouTube too, bro. The fact that like people just find it. And like, I've done this with so many people. Like I just find them. And like, this is one girl who lives in New York City. Her name is called Your Mom Ashley. That's the YouTube channel. And she has this boyfriend and they make these couple of vlogs together. And I'm like obsessed with their fucking videos. And I'm like, I don't even know this girl. Like, why do I care about her life? But like, I deeply care about her life. It's like, it's just the beauty of creativity and the fact that you can actually care about someone's life. It's very, it hasn't existed before. And, social media is what has actually allowed that. And I think that creativity is really important. And that discovery process is also really meaningful. $4.99 super chat. Anthony Sayeron, thank you so much for the super chat. It means the world to me. Thank you for being here. Awesome. David, thank you for being here. All right, guys, I think I'm out. 265 of you stayed for my little rant. It means the entire world to me. July 27th, make sure you are here. Some exciting news. 9:20 tomorrow. We are going to see what today's Wednesday, right? We are going to see the aftermath of CPI and see what's going on. And we'll keep going from there. Market will probably bake it in, probably bake in 100 basis points, and then we'll see how the market ultimately interprets it. I am also thinking of bringing back late night stock talks for the OG members of this channel. Late night stock talks was a thing I did back in March. I will probably be bringing that back in the next 2 weeks after July 27th. So you could assume from like 9 to 11 p.m. I'm going to be live pretty much every night, just talking stocks, doing fun stuff, like fun stuff. So that will be there. And some of you are like, that used to be fun, bro, because we didn't talk about stocks at all. We just talked about a bunch of fun stuff. So I will see you guys there. Yeah, some of you guys remember that. All right, guys, thank you so much. I will see you guys tomorrow. Bye-bye.